Hey, it's Anthony Meisner with Land Title. I wanted to bring you the Greater Metro Denver market update. And here's what we're really looking at. So we have a lot of inventory coming on the market, not as much as we had before, but here we are at the peak of the season for the most under contracts and actives in any year, that May, June timeframe. We're starting to see a little bit of that slowdown looking into the future. So as things start to start to trend down, you're actually going to see inventory rise, right? Because we have less homes going under contract, but still a substantial amount of listings coming on the market. You can see this when you compare it to years like last year or even the previous year before that, where inventory eventually starts to stack up. Now, will we be anywhere near last year? Probably not, because sellers have a lot less appetite than they had in years past. We don't have quite the buying frenzy, so the market's just a little bit cooler. Now, there's some good year-over-year stats here that I think are worth paying attention to. Active units are actually down from this time last year by 24%. That's a big number, right? Because, we had that frenzied market and then sellers still wanting to take advantage of that, but yet the buyer activity had ceased or slowed down last year. So this year, in, more normalized terms, things are shaking out a little bit more, seasonally stereotypical to what we would have seen, pre-pandemic. Now, that -7% pending number, that's great, because that pending number is actually getting closer to year over year at zero, or trending like we were last year. And so we're starting to see all of the craziness in the season we had in 22 wash out and get into more of a normalized, more seasonal trend that we see today. Now, here's the attached market. The attached market is quite a bit different. Our active units are only 4% down instead of 24. We're seeing this all over the place, where, attached is kind of catching up to those numbers we saw in the past. And, those pending numbers are down only 5%. So this is a good sign. Let's get into some of the inventory so you can really see what we're dealing with here. Last year, we had 7,000 units at this time. Not even close to balance, right? A strong seller's market, but it really was starting to trend up. Now we're at 5,600 units, and we're going to see a large increase, well, at least some increase from here all the way through September, October timeframe, because those increases in inventory are just seasonal, right? Nothing like what we experienced last year was seasonal, compounded with buyer behavior change. So now that we have seller behavior pretty stabilized, buyers doing their thing in this new market we're in, we just have this big difference than we had before. So I think it's important to know that. Now, the big differences come submarket to submarket. You can see some of these submarkets are down 5%. Look at Denver, right? Active listings are barely down. Then other markets like Douglas County or Jefferson County have really slowed in the new inventory markets compared to where they were a year ago. So definitely bug us for that submarket data as you need it, because you're really going to see quite a bit going on there. The other big difference here is, we are at our month supply of inventory is about 1.5 months, right? So it's a super strong seller's market. That's really similar to where we were last year. The only big difference is it came on fast last year, right? So we went from these crazy bidding wars into a more seasonal slowdown, and then it continued to rise a little bit through the fall. But, buyers are going to have a really good time right now compared to what they were in the early spring or in that February timeframe getting under contract, right? There's more for them to see. They have less competition out in the marketplace. And so as that month supply of inventory tends to rise, you really start to see those changes in the behavior and, what you can do for your buyers. Now, this is one I think that's really important. May or June is generally the fastest pace of the market, right? So we're showing 125% increase. That sounds scary, but in all reality, we were in the fastest market we'd ever seen last year at 10 days. Here at 22.5 days, it still feels pretty fast, right? There's still bidding wars taking place in some markets, and there's still a lot going on, but look submarket to submarket, right? Certain markets are much faster than others. So you really got to kind of watch this one and just see, for my buyers, what are they going to be experiencing, and helping to set those expectations. Going forward, though, you're going to see a rise in days in MLS through the rest of the year, because it should look like a horseshoe, right? January or so should be the slowest part of the market, and then the fastest part of the market being in a saddle in May or June. Now, here's average sales price by price range. I like this one if you're working with your buyers, because they tend to shop by price, not by location as much, even though it's generalized location, right? They could be in a mixture of different cities in many cases. So you can really see here just some of the shifts in the marketplace, right? That, 2 million to, let's just call it, maybe maybe 600,000 range is down significantly more than the rest of the market. And I think it's largely just due to the cost of money. You get into the higher end of the market, look at the 3+ million mark, right? We have 8-9% increase in sales. When it starts to be more cash, cost of money doesn't seem to be affecting the sales quite as much. Now you can see it in the inventory as well, right? Those lower end prices, those under 600,000 mark, they're moving quickly. There's still quite a bit of inventory coming on the market, but those higher price points are starting to get people to make different decisions than they maybe would have otherwise. You can see it here though, under $1 million is a super strong seller's market, right? I think there's some real trade up potential right now if you wanted to sell at one of the lower price points and move into that $1 million+ market, because inventory has been starting to rise for months and months now. You can see the pace of the market is slowing down, but if you can get over 3 million, you're in a buyer's market, right? It's very different tiered than it was even a couple of months back. The 2 to 3 million market has a ton of opportunity right now. There's 5 months of inventory, and you could really sell at, million and a half, maybe get a really good situation on the sell side, and you could go trade in something with some potential at the higher end of the market. So I think it's worth having some of those conversations as well as you go through this. Here's the sold analysis. You can see that year over year we're down about 20% from this time last year. Things have slowed. We're closer to those 2014 sales figures than as we have been before. Excuse me. Let's take a look at the average sales price. I think average sales price is one where it's worth having a conversation about this, because not all markets are created equal, right? You can see in the submarkets what's going on, but the attached market has been trending really similar to last year. I think it's a good sign. Year over year, we're down only about 3%. The detached market, we're down a little bit more than that. But this is where, with cost of money being prohibitive, you see a lot more people trending into this direction. But home sales on average are down, about $18,000 from this time last year. It could easily be some of that as composition of sales as well. Now, if you look at this one's interesting because you can see we had a really strong first half of last year. We've been in that kind of realm, and we've been really struggling to keep up. I mean, right, if you look at it year to date, we are down 20.5% compared to this time last year. Now, Denver County is lagging down 28% year over year. So you're seeing certain markets be slower than others. Get out into somewhere like Broomfield County, you're only down 10%, right? So it just depends on the county you're in, but sales have obviously significantly slowed, and it's due to that cost of money and consumer confidence in the marketplace. But as you look into the latter half of the year, especially fourth quarter, we should pick up some of that gap, right? Because we had an extremely slow fourth quarter last year. We're going to see sales exceed that this year, and assuming things don't change in the interest rate markets, right? They crept up a little bit last week and then kind of plateaued off, but honestly, if things remain fairly stable, which is what we have to assume at this point, because everybody's telling us they're going down and then they don't continue to go down. But if they do go down, great. If they don't, we're going to see, similar behavior to what we have right now. And I think that's how we have to make our best decisions. So the last one I wanted to talk about was just this percentage listed sale price. People are talking about bidding wars in the marketplace. Well, what are they really experiencing versus last year, right? Last year around this time, we were getting crazy over asking price offers. People were basically throwing everything they had at the house. And now, with the less buyer activity out there, it's a little bit more reasonable, but it's still a really strong seller's market. 100.3% listed sale price means the average home is going over asking price, right? So you have certain markets where obviously things are higher than that. But you get into some of the higher price ranges, you should really start to see this slow down come the fall, because we had bidding wars at the 3+ million mark last month too. And as there are less buyers in the marketplace, more inventory entering, you should see this trend down a little bit through the fall. So nothing crazy, but last year we kind of saddled around the 98% range. If we get to maybe 98.5 or 99% by the end of the year, that would be more seasonally expected than what we've had in years past. So we've definitely trended in a very different direction than a year ago, but you can see we're back to a little bit more normalized behavior in our real estate market. I'm Anthony with Land Title. Don't forget to like and subscribe to the channel if you want to see more videos like this, and I'll catch you on the next one. Have a great day.